Intel reported its highly anticipated quarterly financial results and held a conference call with Wall Street analysts. This company is one that investors are watching very closely because of the major changes that are happening inside. The tens of billions of dollars in investments in capital expenditure to expand and enhance their manufacturing. Investors want to know what's going on with Intel stock. I'll provide you the details in this video.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Intel's new CEO after Pat Gelsinger was forced out, Liputan, saying that their goal is to reduce inefficiencies and redundancies and increase accountability at every level of the company. And that's been a lot of the complaint with Intel is the company has failed on execution. They did this to themselves. It wasn't something that was impacting the entire industry. If you look around, their competitors are doing very well, especially Taiwan Semiconductor Manufacturing Company. Even Samsung won a huge contract with Tesla. The value could exceed $15 billion. Intel, meanwhile, has failed to attract a major customer to its foundry business. During the second quarter, they completed the majority of the actions needed to achieve their year-end target of 75,000 employees. As of right now, as of the end of the quarter, Intel reported having around 100,000 employees. They said that in order to get from 100,000 down to 75,000, they're going to rely mostly on attrition and not replacing people that quick. I think that's a prudent way to reduce your headcount is through attrition. I like when companies take that strategy rather than doing these mass layoffs and mass cost cuttings that they have to pay billions of dollars in severance pay, something that I was not a fan of. If you recall, I did some videos about how Alphabet handled their big job cuts in late 2022. They had to spend a lot of billions of dollars in paying and severance and all of that. And now they're hiring people again. And so I don't find that as being incredibly efficient. And so I like the strategy of attrition, doing some of the major lifting in cost cutting. Of course, you can't allow that. You can't have that be everything in your cost cutting because uh, you need to be more precise in the type of employees that are leaving in the groups and segments and teams that they're leaving from. And so you can't do it all by attrition, but relying on attrition for a large part is extremely helpful when you're trying to engage in cost cutting. So the manager saying that these were hard but necessary decisions and reduced management layers by approximately 50% in the process. One of the ways the company is controlling cost is consolidating their assembly and test operations in Costa Rica into larger sites in Vietnam and Malaysia, and they will further slow the pace of construction in Ohio to ensure their spending is aligned with market demand. So consolidating means they're closing their facility in Costa Rica, I should say, not Costa Mesa, which is a town in California, not too far away from me. Costa Rica, they're closing that site and then shifting operations to Vietnam and Malaysia, and then slowing the construction in Ohio to ensure their spending is aligned with market demand. And that makes sense. They can't fill the capacity in their existing facilities. So why build more facilities? Why create more manufacturing capacity when you have an abundance of capacity right now? I think the priority for Intel is attracting customers, is attracting that demand for their existing facilities rather than building more facilities or building increases in the availability. That is, of course, unless the newer facility would allow the company to have such a large scale that they can offer to build for third parties at much lower prices because they have such a large scale. That is something that, of course, the CEO considered when making this decision, but still decided to pause the spending or slow down the pace of spending here in this Ohio facility. I wonder if tariffs had something to do with that. I wonder if tariffs have something to do with that because at the time of this earnings call, the United States had not yet signed a deal with Europe, and one of the components that Intel uses in their manufacturing facilities, one of the most expensive components, is from ASML, a European company. And so maybe Intel said, you know what, there's a lot of uncertainty here with the tariffs. And then on top of that, demand for our products is not that strong. So let's not make this order. But now, since this conference call came out, the United States and Europe signed a deal where the European market importers from Europe will face a 15% tariff, which is much lower than what some of the companies were expecting. And it's more certainty, right? You can feel more confident that if you make an order today for something you're going to receive next year, you're not going to be shocked with the extra 30% cost on top of what you planned or a 50% cost on top of what you planned. You're not taking that risk anymore. So I'm curious in the next quarterly update if the management team talks about this and says, since there was more certainty, we resumed at a normal pace our construction in Ohio. That's going to be interesting. I'm going to look out for that going forward. This document, by the way, I'm reading is Intel's latest quarterly earnings call transcript. I have this document available for my channel members. You can join for less than $5 a month. There's a link in the description. I have Intel's latest quarterly conference call, as well as Tesla and a few dozen more, and I'm adding to these regularly every week. So on Intel 18A, they will continue to make steady progress on their yield and performance targets. Intel 18A is the foundation of at least the next 3 generations of Intel client and server products, and we remain committed to ramping this technology to scale. And this is where they've been investing a lot of capital. And as I mentioned, tens of billions of dollars have been invested in the expansion and improvement of their manufacturing capability. And we have yet to see the benefits of those investments. Some of the experts in the industry are suggesting that Intel won't really see the full benefits of all of these investments until 2027. So not this year, not next year, but probably the year after that, investors will see the full benefits of Intel's investments in these expansions. That's why when I talk about Intel, I say this is not a near-term stock. Even though it's performed relatively well here in 2025, I've had this stock rated as a buy in 2025, but I told investors that this is something that you need to have a long-term investment horizon to even take a chance on Intel. It's a big risk because you don't know if this turnaround is going to work. And even if it does work, it's going to take time for that turnaround to complete. So this is one for investors with a high risk tolerance and a longer term investing horizon. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.